Shifting our attention over to the markets now. This week, we're once again joined by Market Analyst Kyle Bumsted. Happy New Year to you, Kyle. Thanks for joining us here on Market Journal.
You bet, Bryce. Happy New Year to you too and all the crew down there, and thanks for having me back.
You guys had some snow up by where you're at, Erickson, Nebraska. How much snow did you get, and what kind of a mess did that create this week?
Well, it kind of depends on what drift and what hill you're behind, but I'd say anywhere from 6 to 10, maybe 12 inches, depends on what side of 91 you're on. But yeah, definitely the wind can stay down for a couple days here until we get a crust on the snow. That would be great.
Let's jump into these markets. I want to talk about the grain market first. As we started 2023, it's been kind of negative for some reason. Why is that, Kyle?
Well, I think a combination of reasons here. Number one, the month of December, we saw some sizable non-commercial buying here as the last commitments of traders here. We saw the corn long, or they covered a lot of shorts and they went longer on corn. So we did see some non-commercials come in here. But one of the bigger things I'm looking at here is I think there's going to be some grain move here, or has started to move here after the first of the year. We've gotten the calendar flipped. We're 60 days away here from starting to see a lot of dollars move here. Once we get to the 1st of March, we got a lot of fertilizer, some rent, things like that to move here. And also the basis has been fairly strong. It has weakened a little bit as of late, and so has the carry in the market as of late. But I think that's because people are just starting to open the bins up, move some grain here after the first of the year.
What should we be watching in the grain markets to see some positive movement there?
Well, I think we need to kind of keep our eyes on our local basis, also our national cash basis index, which is still at historically high levels. When you look at that over historic level, I believe last night it was somewhere between 6.5 and 7.5 cents over versus the previous Friday's close, I think about 9.5 to 10 cents over, which is historically high on a national basis. So you do need to keep in check your local basis. Also note the carry in the market. Where are we at here as far as March corn versus July corn? Does it pay me to store corn out there? Right now it doesn't, because March is actually a little bit higher price than July, or run about the same price. So, it really doesn't pay to store corn in the bin out to July when they're not giving you any more for it.
All right, Kyle, let's shift over to the cattle market. That's where you like to spend some of your time. We like to talk about that when we bring you here on Market Journal. Size up the cattle complex for us right now. How do you see it?
Well, here, as we're talking, we've seen some ups and downs so far this week. We started off in a very negative tone here to start the week, and then towards the middle of the week, we had a nice sizable rally. We were up over $3 here on this March feeder cattle contract, which looks really good. We got up into some new areas here. We filled some upside chart objectives. We filled a gap up there at 188.15 on that March contract. Was able to close just above it there at 188.22 that afternoon. And so the key here is going to be how many feeders are coming to town, which this week did also open up our sale barns in the Southern Plains again, starting here in the middle of the week. We had El Reno. They had a sizable run, about 4,000 head. And so far, looking at that, it looked to be about steady with their last sale of 2022. So that's going in there. But some of our sale barns here in the north may struggle here for yet a couple more days trying to get some cattle to town. But I am seeing some higher dollar feeders out there after the first of the year than we did before we went home for Christmas and kind of closed up the sale barn. So you're talking, there's some 7 weights that were down in Kansas midweek. They were bringing in the $2 range. So that's a pretty good ticket on some of those. And it's just not something you've heard of recently in the southern plains here as far as feeders bringing that. Now, there were some of the northern plains here last week, Christmas and New Year's. There were some 10 and 11 weight cattle brought $1.74, $1.75, but there may be some non-implant things going on with those. I'm not sure, but that's a pretty good ticket here for some of these feeders. And it's about time that the ranchers and the backgrounders got a little bit more.
On that point, Kyle, let's go back to 2022. Venture with me here a little bit. I remember being in January at the Cattle Industry Convention. There was all sorts of high hopes for the year that it was going to be in 2022. In your opinion, did the year live up to its potential?
I think it did in some ways, as we made new contract highs in a lot of these contracts here at the end of the year. So we did see that market go higher. However, I'm not sure as producers and feed yards, they made any more dollars net at the end of the day. We were just handling more dollars in the meantime. And for right now, as we sit here recording this, it does feel that we're somewhat set up the same way. We're going to be handling more dollars with the same amount of margin that we've dealt with in the past.
Yeah, I'm glad you brought that up where we're sitting today, because that's where I wanted to steer this conversation as we kind of do a big picture outlook on 2023 and what could be ahead here. You really have to manage your costs to get some more dollars, it seems like here, because everything's going up in price, isn't it, Kyle?
Well, that's right. It is. And I know we've seen here start the year off, we've seen a softer tone on grains, and everybody thinks that's great, which it is. If you're feeding cattle, it's your input cost. But how do we tackle that? Because corn was a higher price when we put it in the pit last fall, or depending on your situation, everybody's got different situation how they calculate cost of feed, cost of gains, things like that. Now, talking with some producers here in Northeast Nebraska here the last couple of weeks, they've said, well, guys are talking about higher cost of gains and things like that. We think it's a little bit too high, but another thing that we have to keep in mind is interest has gone up, and so it has freight on a lot of these commodities, whether you're shipping in corn or shipping out cattle, shipping in feeders, whatever it is, shipping costs have gone up too. So we do need to keep that in mind, but our interest rates are going up here. We're about double where we were a year ago on just looking at some of the rates that are out there. I check those rates weekly. We're about double that right now is where we were a year ago. A year ago, we were about 3.25%, and right now we're about 7.5%, closer to 8% on some of those rates as far as prime goes. So that's where your banks are borrowing off of. Some instances you can see some double-digit interest rates out there depending on the operation.
All right, Kyle, 30 seconds or so. Final word is yours. What else do you want to leave our viewers with today?
We also need to keep in mind that demand is very fickle at times when it comes to boxed beef. So you're going to hear a lot about boxed beef, packer margins. We don't know what the packer margin is because we're not in that industry. We're feeding cattle. We're also, walking our grain off the farm. That's how we market it. So keep in mind, if it makes sense, do it. But if it also makes sense to lock in a profit or protect the downside, do that as well. Options are very cheap. Not saying you have to do something marginal, but do something that protects the downside.
Kyle, thanks for the time this week. We sure appreciate it.
Thank you, Bryce.